committee meeting of July 28, 2009. I'm chairman of the committee, Roger Horton. With me today is Council Member Schneider. Today's agenda includes one item, which is the June 30, 2009 investment report. Mr. Pearson.
Good afternoon, Mr. Chair, Councilmember Schneider. Today's report will be presented by our Treasury Manager, Jill Tara.
Good afternoon, Chair Horton and Committee Member Schneider. I'm Jill Tara, Treasury Manager, and I'm here to present the June 30th investment report and fiscal agent report for the same period. I'm also, since this is a quarter-end report, going to give a brief overview of some of the major economic activities.
Councilmember Falcone has joined us.
We had an interesting quarter in the economy. Financial markets exhibited continued volatility. Treasury yields moved generally higher due to increased supply to fund the U.S. government's the bailout and economic stimulus programs, as well as investor concerns over inflation. At the quarterly meeting in June, the Federal Reserve Open Market Committee held rates still low, at an all-time low of the range of 0 to 0.25% to counteract fears of overinflation, and they also indicated that rates would stay low for an extended period of time. GDP fell an estimated 1.5% during the second quarter, which is a marked improvement over the 6.3% decline that we saw in the first calendar quarter. The index of leading economic indicators increased for the third consecutive month by 0.7%. And as you know, the leading economic indicators predict economic activity. So that's an encouraging sign. Housing starts and also sales of family homes were up in June in response to favorable mortgage rates and federal housing incentives. And even with these small signs of economic stabilization, consumer confidence dropped during the quarter. We saw personal income increase by 1.4%, with consumer spending increasing only slightly at 0.3%, and a really big jump, the highest jump in 15 years. The savings rate increased to 6.9%. So we're seeing a change in consumer behavior in response to the protracted recession. I'd like to talk a little bit about the investment activity for the quarter. As you can see on the overhead, the purchases during the quarter were $20 million. It consisted of $14 million in callables as well as $6 million in bullets. Calls during the period were $8 million, and we had $10.45 million in maturities. All of the purchases during the quarter were the highest rated AAA federal agencies, the highest investment grade. The average yield to maturity on the purchases during the quarter was 2.25%. versus the average yield on calls and maturities, which was 4.69%, and that just reflects the lower rates in the market. Our maturities are maturing at a much higher rate than we're able to replace into our portfolio at this time. The next table shows the corporate medium-term notes that are held in the city's investment portfolio. Each line represents a $2 million note. And during the quarter, there were 3 downgrades to corporate issuers of securities held in our portfolio. However, I wanted to assure the committee that all 3 issuers are still rated A or better and consistent with our investment policy guidelines. The first downgrade was in April when Moody's downgraded Berkshire Hathaway Financial. A lot of their own investments are in key sectors such as construction, retail, and corporate finance. And in response to the impact of the recession on those industries, Moody's downgraded from a AAA down 2 notches to a AA2. The second downgrade came in May when S&P downgraded Toyota Motor Corp from AA+ to AA in response to the protracted challenges in the global auto market, as well as Toyota Motor Corp's own earnings guidance for the next year of weak earnings expected. Then lastly, in June, S&P downgraded an entire sector of the 18 banks on their credit watch, which included Wells Fargo, and as you can see there, we hold 2 $2 million Wells Fargo notes. They were downgraded 1 notch from a AA to a AA minus. But again, All three issuers still remain well above the minimum guidelines for investment of securities in the portfolio. The next chart on the overhead shows the investment yields over the last 12 months. The city's portfolio at June 30th, over on the right, that's the top line. The investment yield was 3.1% for the quarter. As of June 30th. The LAIF return was 1.51%. The 2-year Treasury, the next line down, it was 1.1%, and the 90-day T-bill at an investment yield of 0.19. So as you can see, the city's portfolio continues to outperform these benchmarks that we measure ourselves against. But we will see that decline again as we replace lower yielding securities in the portfolio. Both in April and May, I gave a report on the investment portfolio, so I'd like to focus on the activity for June only now. The overhead shows page 1 of the attachment in the council agenda report. You can see that the purchases and deposits at LAIF during the month of June totaled $14.5. There were $6 million in purchases of federal agencies and $8.5 million in LAIF deposits. We had no sales and no maturities during the month of June. We did have $5 million in calls as well as $17.5 million in LAIF deposits. The right-hand side of the attachment shows the investment income on the pooled investments. For the month of June, the pooled investment portfolio earned $411,107. The interest earned at LAIF on the RDA cash held up in that money market account totaled $29,871 for total interest earned on the portfolio for the month of June of $440,978. Page 2 of the attachment is a summary of the cash and investments held in the portfolio. As you can see, the ending balance of the city's investment portfolio at May 31st was just under $179.2 million. At the end of June, the portfolio totaled $174.3 million. That consisted of $56.1 million held up at the LAIF money market account. We had the $2 million certificate of deposit at Montecito Bank and Trust, $90.9 million in federal agency issues, $12.25 million in corporate medium-term notes, as you saw before. And the investment portfolio also held the $7.8 million airport promissory note, which just renewed last week. Also, at June 30th, the cash held at Santa Barbara Bank and Trust in the money market account for our operations totaled $5.2 million. The yield to maturity on the overall portfolio went down 4.7 basis points from 3.148 at the end of May to 3.101 at the end of June. And the portfolio lengthened slightly by 49 days from 416 to 465 days. The last page of the attachment, it shows the cash and investments held with fiscal agents for the various bond issues in the city, as well as the safety retirement fund. And the book total on that portfolio, or those investments at the end of June, was $81.8 million. And that concludes my report, and I'd be happy to answer any questions.
Ms. Falcone.
Thank you, Mr. Chair. Santa Barbara Bank and Trust has just recently changed ownership. Is that true? Is that the one?
Mr. Chair, Councilmember Falcone, not to my knowledge.
All right, maybe I'm thinking about something else.
Yeah, I don't think they changed ownership, to my knowledge. To my knowledge.
That's yes. The Santa Barbara Bank was just bought by
It's
a
the
group
Santa
of
Barbara-
local investors.
Yes.
The
Okay.
Santa Barbara Bank, not where the city does our banking.
Okay,
we
that's
bank
the
with.
And actually, let's be clear. I think it's Bank of Santa Barbara.
Okay. That, because I think in one of the newspapers they may have gotten it wrong.
Oh.
And I think it was Santa Barbara Bank and Trust. So I just wanted it to be very clear that where we do our business is business as usual, and whatever bank transfer of ownership we're reading about is the Bank of Santa Barbara. not Santa Barbara Bank and Trust.
That's correct.
True. Okay, thank you.
Let me ask a little bit of a longer range question. We know that the revenue projections that we're beginning to see now for the first quarter are not good, and that we are going to have to take a look at this very soon, in a matter of a few days. How will the performance of our portfolio play into that scenario? Can you talk about that?
Chair Horton and committee members, I don't believe that it will play into it. The revenue that comes into the city is for operations and budgeted for the particular expenditures during that year. It will
Right.
affect our ability to finance our operations, and without expenditure reductions to avoid the use of reserves during the year.
Well, that's what I'm getting at. Is it's another matter that we're going to have to deal with in the overall problem that we're facing here in the
That's
city.
correct. And the investment income in the general fund is just a small piece of the overall
Yeah.
revenue.
That was my follow-up in terms of the projections we have in the FY10 budget for investment income versus what you're seeing day to day in terms of when items are called and other purchases. Are we still in line with what we have in the budget, or is that also going to need adjustments as we move forward?
Committee member Schneider, I believe that there may be some small adjustment, but we did ratchet back heavily
Okay.
and factored in, an expected repurchase rate versus what the existing portfolio was performing at, if that's clear.
Yep, that makes it clear.
Okay. Further questions? Is there a
I'll move-
motion?
I'll move this to consent
Is there a
calendar.
second?
There is.
Okay. All those in favor, please say aye.
Aye.
Motion carries. Thank you very much.
Thank you.
Jill.